What's going on YouTube? This is Dave's Daily Trades, where we cover daily AMC technical analysis, price predictions, and of course, bring you the latest greatest news. In today's video, we are going to be going over everything that you need to know for Monday, guys. I truly believe that we have a big week ahead of us, and personally believing that the next 2 weeks are going to be the start of something really great for the AMC Bulls. Now, of course, in today's video, we are going to be doing a quick look and a quick technical analysis of AMC, and boy, are things looking good, and especially comparing the early to late May run-up is very, very similar to where we sit right now, and of course, making some predictions based on that. We are also going to be going over the big blaring issues with some of the banks, especially Bank of America and, of course, Citigroup as well. And then going over the probability of bankruptcy because, boy, are things not looking good. But without further ado, let's roll right into the intro. All right, guys. So, looking at the technical analysis for AMC, things, like I said before, are looking super, super good. So, over here on the right-hand side, this is current date AMC, and on the left-hand side, this is from 4/13 all the way until that June 2nd run-up. So, of course, these charts, as you can see, look extremely, extremely familiar. And that is really where I'm getting these price predictions from. And guys, feel free to pause the video, draw similar technical analysis on your own chart so you can completely follow this for the days and weeks to come. So all we're doing is we're using the Fibonacci retracement from the low at $8.31 on 4/13 all the way to the mid-run on 4/27. And that really equates to the bottom over here at $29.40 on 8/11 and the recent high at $52.79 on 9/13. So that is exactly where I'm getting this from if you do want to follow along on your own charts. Now, the really great thing is we came down from this run in early May, to be exact, May 6th, to this 78.6% retracement level. And we had the same exact thing happen on 9/30. We hit that 78.6 and had a massive spike up back into the 61.8 level retracement level. Now, of course, do I think that we are going to just start going crazy? Not necessarily. I do have a low point drawn in here, right around at $35, $36. That would really be the bottom out if we do decide to run a little bit lower on Monday or Tuesday before starting that run up like we saw over here. So, of course, that could not happen. We could literally touch on this point and start moving up just like we saw over here on May 11th. Now, the big thing that we do want to talk about is this 50 level retracement and the 38.2% retracement, because that is really where we start to take off. So at that 50 level retracement, that would bring us back into the $40 range. Now, a hold on the daily chart is really what I'm looking for of this range, and that is what will confirm that next run up. And look at this back in late May. Once we came up and broke out of this Fibonacci retracement, over here would be our 52.79 for our new level. But once we do break out of that, we tend to go really high. This would probably be somewhere in the 60s, come back down to this level over here. And once we touch back down on the 52.79, that's when it's off to the races. But the big thing, guys, is it's going to take a little bit of time to play out. So make sure you're tuned in, because this is something that I'm going to be tracking every single day for the next however many weeks it may take. All right, so jumping right into some of the news. So really the biggest thing that I did want to go over is the issues with Bank of America. So the biggest thing that I want to, and of course I'll link this in the description, we are looking at page 53 on this document. And really the biggest thing here is the net change in trading and derivative assets / liabilities. Now, of course, if we do zoom in here, for 2021, currently right now we're at 58,372. And this is not in thousands, this is actually in billions, guys. So seeing that Bank of America has a net loss of $58 billion is just absolutely mind-blowing. But really the biggest and most important thing of this is, yes, Bank of America is having issues, but guess who runs all their operations or most of their operations through Bank of America? It is, of course, Citadel Securities. And it is an issue because 96.69% of Citadel's net derivative assets go directly through Bank of America. So seeing that Bank of America is really down on this right now is really showing that other market makers and hedge funds who run their assets through banks such as Bank of America and Citigroup are also really feeling the early struggling signs of what's going on here today. So for anyone that wants to sit here and argue that buying and holding is not working, well, guys, this is perfect evidence that what we're doing is going very far. So that's really great to see. Now, I do want to point you over to a new website that I've been looking at. It's called macroaccess.com. And of course, really the big thing is here, you can do a lot of macro research on certain ticker symbols. So of course, the two that I'm really looking at is Citigroup and Bank of America. So over here with Citigroup, we're just going to read through this right now. And excuse my shitty internet. I apologize for that. You're going to hear these things going off like crazy. But anyways, Citigroup is trading at a 71.18 on the on this scale over here. But really the biggest thing is Citigroup has a 50% odds of going through some form of financial distress in the next 2 years because and did not have a very good performance for investing during the last 90 trading days. So that is something really interesting. But also what this website has is a probability of bankruptcy. Now, what we're looking at right now is Bank of America on the other hand. And look at this. This is absolutely insane. And I'll link this so you guys can click on the link and just be brought right to this page. We're just about 2 scrolls down. Now, anyways, Bank of America has a probability of bankruptcy at 46%. Now, I do encourage you guys to play around with different banks, different institutions, because I have found some of the banks are actually over 50%. So that is absolutely huge. Of course, we'll just take a quick read through some of this. So the probability of bankruptcy, a part of valuation analysis module that helps investors searching for stocks, yada, yada, yada. Our current calculation, Bank of America probability of bankruptcy is based on Atman Z-score and I don't even know how to say it, the F-score, but not to be limited to these measures. And all this is, for anyone who doesn't know, is certain calculations based on certain fundamentals that are thrown into a formula, and this is what we get. But the big key thing is here is a probability of 46% bankruptcy is absolutely insane. Now, of course, we can throw in Citigroup, JP Morgan and Chase, and other banks and institutions that are all right around 50% because I have gone in and looked at that. And that's just absolutely insane and really shows what is about to come is going to be massive for the economy. Of course, they are going to take, and the overall economy is going to take a big hit. But on the opposite side, when we have Bank of America showing negative $58 billion in derivatives trading, that's loss in derivatives trading, is showing that these banks and institutions cannot hold up much longer. And of course, that is really the end game when they start to dish out those margin calls. In AMC, GameStop, and of course the other meme stocks and heavily shorted stocks are going to go absolutely insane. Now, I know, guys, this was just a quick video, but I really just want to show you what I'm looking at for next week, and I think good things are going to come. This run is going to be slow to start, but once we do break out of this range over here at 52.79, that's when we're off to the races. We'll have one last retest, and that is really what I predict will be the start of our next short squeeze. All right, everyone, I hope you enjoyed today's video. Be sure to hit that like button and subscribe for more content. Peace.